Build-A-Bear, both BBBW. That's been on my screen more than one fucking time. Where all of a sudden I'm bidding freaking 2,000 shares of Build-A-Bear, which trades by appointment. So you're moving the freaking bid by like $5 just by even showing up there.
At one point I owned 15% of the Build-A-Bear company when I was in my early days at Fidelity. I had drunk the Build-A-Bear Kool-Aid, big free cash flow story. And then I went to their office in St. Louis, and I've never seen an office that had more dogs than that office. That office was very heavy on dogs. And then I remember meeting the founder's name, Maxine, and she was nice. She was smart. I think she was a former Nordstrom or something. She was like a good retailer, but she was referred to herself as the chief executive bear, and I was like, oh, okay, I see what's going on here. Dogs and chief executive bears, and you can't comp positively, and look, they tried their best, and then I had to get out of there.
That's a bad name for a student.
It's an incredible turnaround, and they do stuff like Valentine's Day, where you expect it to be kind of just right on that fine edge of like Spencer's Gifts, where it's like, are you guys really kind of secretly into furries? Like, what kind of creepy thing is going on here secretly? But they actually come up with kind of tasteful but provocative, bear options for your freaking creepy, pervy needs. Still 10 times earnings, still ridiculously cheap. They're just kind of cranking it out and making money selling shitty bears.
Yeah.
Hey Jeff, check out Gary Goldman's bit on Spencer Gifts and Things Remembered. It is, if you haven't seen it or heard it, he's a comedian. He's absolutely hilarious, and it's very, very funny. You'll appreciate it.
During a Dave and Buster's visit, I stopped by at Spencer's Gifts, and holy shit, it's both locked in a time capsule and like updated for today's modern kinky creepy shit.
Yeah, you want to take a shower when you get out of there.
Oh yeah. It's yes, the sex toy collection is most disturbing. And just unabashedly, like, here's a corn stalk. Look, here's an alien one, and it's just like you're freaking. Oh God, I felt like I should register with some sort of federal board after just being in the store. It's like, I got it. I didn't know anything about that. This is supposed to be just like Farrah Fawcett posters, man. This is like women in bikinis and beer posters. They've upped their game since 1978. This is a whole different kind of party.
Oh my God, I'm in such a good mood today. I mean, this market, it's just like, now it's Friday. It's like we can see the weekend in play. It's just Gap's up. How much is the Gap up right now? I saw 16% earlier. How much
16%.
Oh,
that's glorious.
Love it.
You know why people pick up nickels in front of steamrollers is because it's so fucking fun when you pick one up. The risk reward right now for retail is such dog shit. So to have got along, it's like, this is the most blissful 15%. I saw that crossing the tape while I was out with JC yesterday, and it's like, fucking my week just became golden. Just became golden. Just being right feels so goddamn good in a tape like this. It's like, it's just in my veins.
Totally agree. That's kind of like a good example of this tape. It's like the ultimate level of shenanigans of like Costco and Walmart, meh, and then you're like going along the Gap, baby, like it's 1997.
And just working it backwards, man. That's why you listen to the calls. This is freaking when Daddy gets paid, man. You listen to all the calls, you get the vibes, and it's like, Gap is going to report the same quarter as everyone else. Only for Gap, it's going to sound fucking amazing to have flat comps. People are going to be like, holy shit, the comps are flat. This company's on the mend, man. This is goddamn. We took 20% out of Abercrombie for a quarter half as good, or twice as good. It's like, this is beautiful.
100% agree. And honestly, I had this conversation with someone yesterday where I was like, look, you just have to be long stuff that has no expectations. That's the trick to playing the game now, because the pod shops are like, they bid up expectations to levels, and the passive just is like this passive momentum thing. So you can fade that, but you got to choose the right timing. But in the long, Jeff, remember we bought Match and at like $30, and then boom, that was like $38, and like it hasn't done that well, but you got a good pop. There's some of that kind of stuff where just
you got a
trade.
good pop, yeah.
You just want to be in stuff that's like beat up is my kind of view, because like it's so many guys chasing what sounds good and the good narrative and all that stuff. Or you do what Jeff does and you just own the best guys and you just deal with the ball, like Costco.
You got to own the best guys right now, because not one fucking person knows what's going to happen to their P&L because of the tariffs. And anyone who says otherwise is lying. It's like, holy shit, just because you're a CEO doesn't mean that you're not just getting the same stream of tweets that everyone else is. How does this affect our quarter? I have no fucking idea. They just threatened like 50% tariffs on Canada. I mean, I'm going to have to do some work. They don't know. With a plan, and the lower the expectations, the better, right? A few companies right now, Starbucks being my favorite, no one expects anything. Like, literally no one has any idea. That is absolutely perfect.
I mean, yesterday, this whole week, right? This whole week, tariffs. Well, they bring out, by the way, Lutnick is the new Kudlow. I've decided that. He's the new Larry Kudlow. So they bring him out to just, go say some shit to, you know what I mean? So he's the new Kudlow. Yeah. And he comes out there and he gives, we might do that. We might do that. And it's like, at some point, people don't want to hear this anymore, because it's like, if you're not going to do tariffs, why the hell are we even talking about tariffs in the first place? And then you're just like, wait, do you not have a plan here? And then that's why I thought yesterday was an obvious fade after that Lutnick announcement. And but it's just a shit show, honestly. Like, that's the best way to describe what's going on right now.
It's the same thing as we had freaking 4 years ago, man. It's just the random, I think today I'm going to stir shit up. Someone talked to the president last night about how awesome tariffs were, and so he's just going to send 9 or 10 tweets throughout the course of the day. Who's going to trade that? Who's going to tell me, oh, here's your strategy in that environment? It's like, fuck, I have no idea.
You know what I'd love for him to be like? I love the Gap. I love the Gap. You all have to go to the Gap. Buy the Gap.
Hell of a call by Jeff Mackey. Many people call him one of the best of all time. Hell of a call. The Gap is going higher.
Okay. What a great start. All right, let's get it going. I'm having fun on this Friday. It is, March 7th. It's going to be June soon. Holy shit. We got the March Madness coming up. We got the Minnesota State Hockey Tournament coming up for everyone that's as excited as Jeff is about that. We got everyone here. So let's get it going. Jeff, so everyone knows, Jeff made me some money this week because he's the man and consumer. What do you got today, Jeff?
I'm just celebrating the Gap, just like you, baby. Just doing a way disproportionate victory lap. We are the meme of the guy standing in third place, chewing his freaking medal and throwing champagne all over himself. It's like, look at this, we found a winner. Gap turned in a decent quarter, and everyone is expecting them to totally suck, and they're a better company than totally sucking now. So that counts as better than expectations. You got to bid the stock higher. And this was really kind of the best trade we've had of earnings season so far. Every retailer seems to be kind of beat and then warn. And I wouldn't really honestly trust a retailer that didn't beat and warn, because it's the future seems a little murky. But this Richard Jensen he's great with the narrative. The expectations at Gap are almost nothing, and they're just doing better. He's doing the same thing that Nickel's doing at Starbucks. He's just simplifying the message to the stores and making the stores, frankly, not feel like shit about themselves. It goes a long way at the Gap after freaking, just slowly eroding for the last 15 years. It's nice to have a little mojo if you're working at the Gap. They've got mostly comps are positive. They're dealing in the same world everyone else is, but this was a good enough quarter, and that's how we made the money. After Abercrombie came out and scared the hell out of everyone, these stocks just got pummeled. That's what you and I were talking about. It's like Gap just got 20% ripped out of it for no reason at all. They turned in essentially kind of the same number as Abercrombie did, only in the Gap's case, that is just awesome. That's not, that's like the best thing anyone ever heard. And so the stock's higher. It's great.
It's fantastic. And honestly, like, it just goes to show that, like, sometimes you got to go where no one wants to go and buy a chart that's a bit on the ugly side. I mean, what do you think of the chart there, Bakes? Tell us what you think about that chart.
I think that it's a nice gap up into resistance, and it's going to have a hard time. It is. No, it is. I mean, you tell me. I mean, it's great. Up 13% is up 13%. That's where the money is. But this is going to be tough to get through. I was struck by three different things. Number one, I'll take Mackey over Dana Telsey because the expletives fly a little bit more and it's a little more spicy. Number two, I don't know what the short interest is, and number three, Athleta, which I think you kind of said was I'm not a disaster, I think, is the quote. And even I listened to the CEO on CNBC, and he said, Athleta had zero comps, and he was taking the victory lap for zero comps. I think I have that right, but I'm curious about the. Listen, it's new people are putting Gap, and they're putting the wrong symbol in, like I did. It used to be GPS. But I think you've got new people talking about it today that haven't looked at it in 3 years, at least.
At least. And it's going to be hard for all these consumer companies. They're not going to break out, to your point, Bakes. There's just going to be this relentless trickle and then sometimes a deluge of tariff type news, of recession type news. And we're in the first quarter period is when the retailers traditionally kind of crap on the expectations because they want to sandbag anyway. Well, to sandbag these days with actual tariff headwinds that are kind of large but unknowable, it's the reverse of I like my catalyst large and unknowable, and to the downside, that works the same way. You can't monetize it. You can't really quantify it, but for sure it's bad. And that just leaves you with kind of, it's going to be hard for Gap to break out of anything. That's why I'm celebrating so hard, because it's going to be a fleeting little celebration. We're not going to have 6 months to party, even though I like Gap long term, but in the meantime, you're kind of taking your wins where you can on these trades because the headwinds are real and the problem.
Yeah, up 13% in a year-to-date down tape is fantastic. That's God bless you.
Yeah, amen.
Are there a lot of shorts there?
Go ahead. Sorry.
A lot of shorts?
No, 6%. 6% short interest. Not too bad. I mean, a little elevated, but not too bad.
Okay.
Yeah, there's not screaming bears on them. It's the optimistic stocks. You kind of just got to ring fence the ones that you think have long-term potential. It's and just discern between what you're trading and what you're actually invested in. I was able to be kind of a little more confident on getting long the Gap because I didn't mind if I got kind of poleaxed on the trade side of it because I like it long as an investment. I think the CEO is good. I think once you get sort of beyond the chop, you're going to end up with a really good company that can earn a lot more than they have in the past. And that's a nice recipe there. Plenty of room on the chart in time, but that time is not right now. And that's what we've seen all quarter. It's Target crap the bed. They're completely lost. That's a good example of weak operators in this environment are toast. They can't guide low enough because they simply have no idea. But then again, Best Buy's a really well-run company. They reported news that should shock no one. It turns out we're not selling that many television sets and printers. No, geez, no shit. It's eventually that'll turn, but this is a well-run company, and they took 15% out of it for stating really the most obvious thing you can possibly imagine. People cut back on their high-end TV purchases, in 2023. That's been a while. But again, so you can be patient. You can take your time on them, and there's no real rush. And you look at companies like Resco, Signet, history is not on their side. Whether you short them here after the plunging that they've done lately is another matter. But, unless something changes dramatically for RH, that's a company that's in real trouble, and they're not alone in that.
And I think what's interesting about this is that, and I know a guy like Kevin's looking for a pattern that's sustainable and predict the future. But one of the things that's interesting that could be something of the future market, because tariffs and lower growth and maybe lower flows, is hey, look, I look at this Gap chart and it's a buy at 19, buy sub 19, and it's a flat chart. So sometimes you don't need a trending chart. You just say, hey, it's overly sold or it's overly bought, and I'm not under any illusion that this is going to the moon or anything, right? But hey, I can make 15% in a day just providing liquidity because someone else wanted liquidity to get out of there because they were scared of, whatever it is in the specific name. And I think that's something to be thinking about other than I got to get a multiple bagger. you can find things that are out of favor or overbought and chop out 15%, 20% here and there. It's a different strategy than some people have, but there's things to do that don't always require like, hey, I bought it at 10 and it went to 30 is all I'm trying to say.
Agreed, and that's why I think that's why Jeff's so great. He's got a Rolodex bigger than anybody else's. He knows everybody and his brother in the space. He's plugged in. I'm not plugged into Gap. There was nothing in that chart would make me stop on Gap or stop on retail, except to maybe pile on and short it. So I just say that's not for me. And then Jeff comes in and says, hey, the expectations are so bad that if Athleta is flat, then the stock's going up. And God bless him.
God bless Jeff. I totally agree.
You're talking about just fund flows. I always come back to the hypothetical broker. And if you're going to, you have people who want to buy these sell-offs just instinctively because they've been pull-axed so hard. It's been really tough in discretionary over the last month. Straight down, I'm just picturing, okay, what dip do you buy? Ben called me. It was a literal phone call of the hypothetical I always use of, okay, what retailer do you buy here? Everyone hates them. Let's buy one. And at that point, it becomes really just...
It was that simple. I didn't ask any more questions. I was like, I'm buying it right here. I'm buying it.
Right,
Boom.
right. And so that's one of those times, very few times, and Ben, you better trade it when it happens. But the best house in a shit neighborhood can be a pretty good trade every once in a while. You pull up Abercrombie, you pull up Gap, you realize these are two stores in the mall. So I can tell the difference between the two, but it'd be really hard to explain to my cousin or a layperson what the real difference is and why one stock is a 10 bagger and the other freaking has been flat for a quarter century. But, it's the market's treating them the same. And that's just kind of the expectations are much different. That's the essence of trading, but you better be fast.
And I'll give you an example that's similar. So I have a buddy out of Miami who we used to live in New York together, runs a hedge fund, and he's a value-oriented guy. And he calls me, I don't know, a week or two ago, and he's like, it's time to buy the Herbalife. Okay, you guys all know the Herbalife of Carl Icahn fame, or maybe Ponzi fame. But it was at $5.50, and I was like, all right, I'll buy it. Stock went to $8 while the rest of the market was going down. Sometimes these things that just have no sponsorship and business isn't falling off a cliff, the shorts are like, well, I got to get out of here, and I'm going to pay a bad price. And, maybe a few guys come in and say, oh, I'm going to own the stock, and the narrative might be terrible, and I love those kind of things. And I think in a market that's trying to find its footing, like this is the kind of stuff that can work a little better than people think. I mean, and to go back to my Budweiser trade, and people hated Budweiser, and I was like, you know what, I'm going to buy the Bud here. And that's been an absolute home run of 25% in a month and a half. So, sometimes this contrarian value-oriented strategy can work, and it feels like it's one of those kind of markets recently. So, anyway, that's enough of me ranting. Kevin, what do you got today, buddy?
Well, no, are you guys, either of you or both of you, Gap, are you still there? Do you peel some off? What are you doing? And if it's none of my business, or I remember
the trading portion, and I'm staying long. I'm staying long a core position on that and trading around it. I think they work over the course of the year. Again, for the reasons we've beaten on for the last 20 minutes, I'm not super fired up on it in the interim. So I added a bunch of it earlier this week when Ben and I were just like, let's go after it. Got a little too manned up on that side of things. So I'm taking off the incremental and just staying long a nice little core position. Trading around stuff is kind of one of my favorite strategies because those are the names you know the best. And, you can just find different trades within it.
And Jeff, you wanted to talk about Costco or no?
Oh, we can talk about Costco. Sure. It's again, you end up
it's okay.
Oh, they were fine. They're nothing super exciting. They're a really expensive company. It's not going to sell off. They turned in kind of a Walmartian type of quarter, where we could be maximizing profits. We're not oblivious to tariff risk. We're still kicking ass and obviously like 5 steps ahead of the targets of the world. And so, there's 3 really dominant merchants right now, Costco, Walmart, and Amazon. The prices kind of reflect that. All the stocks are being under attack a little bit, but still finding support because, the problem for Costco for the last 2 years has been, okay, I get selling it, I get shorting it, I get trading against it, I get all that. What are you going to buy instead? It's because they're just kind of distancing themselves from the competition so much. But, between the two, Costco and Walmart, I prefer Walmart. I don't think Costco was terrific, but I don't think terrific's really an option right now.
Yeah.
For the retailers that have done well, it's just not. The consumers slowed down. They really slowed down in February, scared the hell out of everyone. You might not want to believe one retailer, two retailers, but when pretty much all of them say, the shit hit the fan in February and people just stopped coming to the store, you have to take the word for it after a while.
Yeah.
And Jeff, when we talked about this, I don't know, it was a couple of weeks ago, and we had a Walmart Costco discussion where it was like, hey, I own these and they've done really well, and you were under no qualms that like, hey, I'm not buying it here. Like, let's be clear, I'm not buying it here. I understand that the multiple's really high, but so you're not like surprised. Just part of being a long-term holder is that it doesn't go up green every day. You're going to have a little bit of this along the way, and it just is what it is, and you were very much transparent saying that you wouldn't be surprised if these things are down 10, 15% one day. And just like you said, yeah. Exactly.
Your nightmare scenario of that, is Target. Like, when it just became a fundamentally worse company. And so it went from expensive to super cheap because all of a sudden they just sort of forgot how to retail and fell out of step with the times. But for the most part, with the Walmarts, the Costcos, the companies that are just really exceptionally well-run companies that are built to last for a while, in the fullness of time, we all die. But in the meantime, I want to just be long them and sort of patient with it. Walmart's perfectly capable of market time for 5, 6, 7 years. And then it doubles and triples for you. It's done that for 60 odd years. I think it's probably, it's shown us who it is. So I would expect that's how it's going to continue to operate.
Yeah. More ass kicking basically is the thesis there. More.
Right. Whatever multiple you like to put on ass kicking, that's what they plan to deliver is a big steel-toed boot from Bentonville. And, you can treat it how you want.
We're having fun here on Friday here at Wall Street Beats, baby. All right, Kevin, what do you got? What else you got, buddy?
Jen, pull up my bull bear spread chart, please. But I got a couple of things I want to go out. Number one, I'm thrilled that I'm not in the long only world because you can't trade around positions in the long only world. You got to keep turnover to under whatever it says in the book. There's usually no self-discipline to speak of, and the fact that we can do all this with the freedom that we do and go in and make 50% or more on Herbalife, which most people have an emetic response to, given the Ackman days of yore, I think is fantastic. So I think we're worth the price of admission for that. I want to open the possibility to be ready for this. Both the three of us, our partners, and our members, that Trump very easily could say at one point, you know what, Canada and Mexico have done everything I've asked them to do, or most of the things I want them to do. There are going to be no tariffs. And I declare victory, and fentanyl deaths go down by 60%. And he says that's enough. And I've made everybody pay attention to me. And tariffs are. You stop searching for it, you stop talking about it, and the market absolutely rips. I'm not saying that's going to happen, but most people can't tell me why he's targeting Canada and Mexico. China, I understand. They've been ripping off IP for 1,000 years. But Canada and Mexico sound like misdemeanors to me. So just be ready that you wake up on a Monday and it isn't Lutnick, it's Trump that's in the Oval Office saying, my tariffs have accomplished what I want. I've made America great again, and we're off to the races. So be ready for that. I think that's a real possibility. flows and positioning matter a lot. Jeff mentioned it, and it's kind of going to go into what I'm talking about here. This is from my good friend JC Peretz at All Star Charts. This is the S&P versus the bull bear spread. The American Association of Individual Investor, and I'm just struck by extremes. And I don't get too carried away with these things, but when the bears are so swamping the bulls that they're down at 2022 levels, which is not that far away. I get it, but that's a bear market low, as you can see here. And when you get to that point, people get to the wrong side of the boat and they say, whoops, I got to buy stocks, and off we go to the races. I'm not saying that's what's going to happen. I think there might be a political component. I hate Trump because I'm a bear. That makes that line look like the way it does. And so I'm just, we're bouncing. I'll go into some other things. But we're bouncing today. I'm not going to get too carried away, but I'm going to watch for a rally, and I'm going to watch for the volume on the rally. If it's heavy enough to confirm that it's more than a rally, great. But I'm looking for a rally right now as we sit here. I'll shut up for a
Kevin, I'll let you know. There's no rally. The stocks are already back red. No rally.
All right.
And let me tell you something about this chart, because this chart was floating around last week. This chart is bullshit. Okay, this is ridiculous. We're at the bear market when we're 6% off the all-time high. This is the biggest market of pansies I've ever seen in my life. When this thing's normally there, when we're talking about 22, we're at 3,400 S&P. When this is like in the COVID lows level, like every other level going back 20 years on this AAI thing, because it was going around Twitter, we were at the .com lows, the GFC lows. This is ridiculous. This is absolutely ridiculous, and this market deserves to get dunked on. And we're now red again. And you know what? That's an exact reason why you sell. Because if we're like, oh my God, it's the end of the world, we're 6% off the all-time high. Let me tell you something. We're going lower. Okay, I'm taking the other side of this and saying that bearish might stay as bearish. It might just stay bearish for a while, like it did in 22. They'll just plumb the lows, as you see. You know what I mean? Like I think that's the thing. I think we've all been Pavlovianly conditioned for a snapback, and that basically we might just be in a little bit of a bear market for a little while. It's not the end of the world. Like there's not something that stocks have to go up always, is there?
No, far from it. And that goes to my next point. I just, when you get to extremes, I'm looking for bounces. And then again, I said, if it matters and things rip, that's a different story. I think it's going to be, and I've said this, I think it's going to be, a feeble rally on low volume. And it's time for a respite, it feels like. But again, I'm with you. Down 6% is a cakewalk. The S&P's down 2 for the year. And most people don't feel any real pain yet. And there's no reason why this bull bear number can't go lower, especially given the political aspect that I mentioned. But I don't want to deluge people with I do want to deluge people with charts. But I'm just going to go, pick one out of the blue, mom and apple pie. Here's Jen. I'm going to put Boeing up, but there's plenty of them. Nah, that's not that good. I'll just go back to NVIDIA, okay? And NVIDIA has closed below the 200-day moving average here. It's got a lot of company, and the list is broadening, and the industries are broadening. The volume's picking up. The 200-day is threatening to go to the downside. And I've got my list here. The KRE, the bank index, Salesforce, Bank America, Boeing, Microsoft, NVIDIA, Coinbase, Tesla, Google have all violated the 200-day moving averages. So the flows are moving away from the U.S. to an extent, and certainly away from the Mag 7, which I think are dead. And I'm just watching the market, other markets gathering what what the U.S. stocks are spilling. So I'll go to this. Pardon me. I bought KWeb yesterday, right here, and I know you were China before China was cool, Ben.
No. When I bought China, it was very uncool. I basically got the "it's uninvestable" line from some of our partners here continuously and other people. So it was definitely not cool when I was buying. It's like buying the Gap this week.
I said I gave you the Barbara Mandrell Award for Chinese stocks. You know, she was country before country was cool. You were buying China before China was cool. But you know, I look for the 10 best ETFs, and this is one of them. I go through 4,500 of them every single month. This is Baba, Tencent, and PDD are the top 3 names. They look terrific. It's counterintuitive. Oh, Trump's against them. Chinese tariffs. I don't care. You know, I think people are selling off the Microsofts and the Nvidias, and they're buying some of these to you know, have some tech exposure in other places. And I see this happening in other places. So it's a very promising chart. It's 10% of the portfolio. I'm 5% in cash. I'm down 1% for the year. The S&P is down 2%, and I'm hoping to fight some other battles. So I'm.
Look, you can't argue with what's working. You know, like Chinese stocks are clearly getting bid, and this is a world where the U.S. has been the only game in town, and money's leaving the U.S. and you know, China and Europe. I mean, European defense stocks are trading like they're AI stocks these days.
Screaming.
But you know, this is actually a good prelude of what I wanted to talk about today. Jen, can you bring up my Meg 7 chart? Because I think that this is actually kind of one of the things I thought was interesting. Let's see if we can get that going. But basically, my thesis for a while here has been that the Meg 7, that's not a great chart. I should have used white. But what that is that's the Meg 7 index on Bloomberg, priced in different currencies. Okay, so it's priced in the yen, it's priced in the MXWO, which is the MSCI World. The green line is gold. What you can see is the peak was in July 10th, and then we had that carry crash, and then the Fed does 100 basis points of cuts, and the fiscal government went for a blowout Q4. So we just had a huge like fake rally that was all policy intervention. And so we get this, you know, whatever you want to call it, echo bubble. But this is the world's biggest ATM. That's the way you think about the Mag 7. Everybody in the world, levered ETFs, pension managers, everybody. The Swiss National Bank has reserves of the Mag 7 on their balance sheet. So this is the world's ETF or ATM, and that's the way you think about it. These things are now funding buying Chinese stocks, buying European stocks, buying Japanese stocks. I don't know if they're funding buying our Gap this morning. That might be a little bit of a stretch, Jeff. But but what my point here is that the Mag 7 has had such an amazing run, and it's still up versus the lows of 22. To go back to when I had a real bear market bottom, and we're up 200 some percent, 240% or something on that. So you know, there, just because it's gone down off the top doesn't mean it can't keep going. And to come to circle this up with NVIDIA with you, buddy, I can't wait till that hits 60 and I can get our boy Jeff or Russell Young on here to do some push-ups. I'll have to do some push-ups for Jeff with Anand, and then you can have me and Russell doing push-ups side by side because NVIDIA is going to hit 60 on my bet for him. And then the other thing I wanted to point out, Jen, can you bring up the next chart? Which, again, I apologize to the users. I will do white charts from now on because this clearly is not that great. But this is basically, I'm long the HY43 CDS, which is basically credit default swaps, and offered to some like clients as a product to hedge themselves. You know, basically, you know, maybe this market won't be good. It's one of the like ways to bet against the market in an asymmetric manner. What you see is credit spreads starting to roll up, and look at the PE stocks. This is the percentage return here over the last, 6 months, 5 months or something. And the PE stocks, the BlackRocks, the Apollos, the Blue Owl, By the way, the Blue Owl gets 26% of its income in something called PIK income, which means payment in kind, not payment in cash, payment in kind. So you gotta be a little bit weary of that, of the quality of that income, and then and KKR, and so these stocks are starting to reflect, a different reality that's kind of coming for the mark to market boy or the non mark to market boys, or what do we call them, mark to model guys, then the mark to model guys. And this is what happens when cycles turn. Everyone sits and tells you they have a zero vol fund. It's like, no, you just don't report the volatility. It's actually there. And so it all happens at once. It's like no vol, down 40%. So I think Charlie's talked about it, but I have not shorted these, and I've had them on my board. I wanted to short them, but I thought I was looking at it yesterday, I thought it was interesting that there's a nice symmetry here of credit spreads rising and private equity stocks doing the opposite of rising. So anyway, now we're down 60 bips, Vic. So I guess that rally wasn't confirmed. We have now broken the 200-day moving average. So yeah, it's enjoy your Friday, people. Sorry to leave you with such a cheery note.
Stocks never bottom on Friday. That's 99%.
No, they don't. No, they don't. And
on the upside, there's some real opportunities in the AA high school hockey tournament in Minnesota right now, Ben. I'm long Stillwater and I'm long Edina. Scrappy underdogs, that Edina team. It's gritty, gutty team, underdogs. Bottom at 11. They're trading 17 after last night's victory. And I think this rally kind of comes down to whether or not Edina can pull this out. America's a better place when Edina is in the lead. And so I think that's what I'm rooting for, and that's what I'm betting on.
The whole 2.5 year bull market comes down to, can Edina pull it off, basically. Now, do they televise that? Do they televise
it's on you can watch it online. You can stream it online, and honestly, it's Hoosiers on skates if Hoosiers didn't have the whole uncomfortable racial undertones and the bad coaching and stuff. So it's actually much better than Hoosiers. It's much more wholesome, really. But it's the city you'll be rooting for. It's Edina versus a team that's like a 5-iron from Canada. And so we've got a North versus suburban Minneapolis matchup, which is always when things are classic. Edina is going to be in full Ric Flair mode tonight. It should be a good game, and you can stream it for free. So if you don't got anything going on a Friday, take my word for it. It's worth tuning in.
I love it. And you know what? This market, if it starts going a little south, we'll all be hanging on a string there, cheering for Edina that the bull market's not over, because it's all in their hands.
Minneapolis brokerage houses, which used to be a thing. Minneapolis brokerage houses would close the F down every Thursday, the first Thursday of March, just for this hockey tournament. I mean, it genuinely affects flow. There's an awful lot of, if you drew a Venn diagram of ex-hockey players and guys who go into finance in Minnesota, it would be a pretty close to a circle, like a puck.
Yeah. Well, I think that is a great thing, though, is that as a former basketball player, like, I always enjoyed this time of the year for the state tournament, and then we circle right into the NCAA tournament, and it's just it's a great little period. It's also, this market sucks for most people. I totally get it. It's a nice thing to distract yourself from. Hey, maybe we're in a recession. Market sucks. It's not the end of the world. These things happen. Don't get too upset. And again, there's stuff to do, like buying the Gap this week. Congratulations
and
again,
wagering in black market 16-year-old sporting athletes. There's all kinds of places to park your money, Ben. It's just a matter of where you're willing to go.
And I'll go ahead, Vix. Sorry, go ahead.
I'm glad that Jeff mentioned 5-iron, because I want to congratulate my son on the show. My oldest son, Bobby, hit a 210 5-iron for the first hole-in-one and likely the last hole-in-one in the Baker family. So I just want to get that out there.
That's a hell of a 5-iron. Nice shot.
Damn right.
I love it. Now, the thing is with golf. Let me just one more thing. What's up with the Top Golf Callaway, Jeff? You thought the quarter's okay, and now we're kind of leaking again. Are those guys done?
We're leaking a little. They're not done. They really need to get out of that driving range industry as fast as they possibly can. I'm not sure what the endlessly amusingly named Chip Brewer's doing there, but Chip needs to speed things along on the disacquisition of the Topgolf brand before things go too pear-shaped. They're making a lot of money in clubs. They're having a great year in clubs, and
hey, it's a good
golf
club
last
company
year than ever before. It's a good club company. Clubs are just a bad industry, man. And so it doesn't give you the cash flow you need when your driving range business goes straight to shit, which is apparently still happening.
I that's another stock that I own 15% of in the year 2006 at Fidelity on the Square Club, the Square driver thesis. I know this is almost 20 years ago, but it was a good stock. And I used to go to Carlsbad right north of you, Jeff, for the analyst day, and that was the best. I mean, they bring out Phil Mickelson and some of the pros, and we play golf and that Carlsbad course. See, that's why I was always skeptical of them, though. I was like, these guys aren't probably working after like noon. They're like out of that $75 million Carlsbad course playing golf.
And they completely didn't have to. They shouldn't even be public. This should be the greatest private company in the history of the world that has just an endless number of ex-college golfers who just want to work for them and just make clubs and hang out with Phil Mickelson and just have the greatest labs on earth. And instead they decided to spend $2 billion on Topgolf at the absolute top. And they had Topgolf. They invested in him in the first round when it was a $25 million valuation for the whole thing. And they had this fork in the road. They had this fork in the road where they could have turned that into several $100 million of just cash, which would have freed Callaway to do whatever the fuck they wanted to do with $200 million. It's like that funds you forever. You've got this slow growth golf club business, but the cash would just buy you a cushion for as long as you possibly could need it. And instead they're like, you know what? We're doubling down, baby. We're doubling down. We're going to lever up and we're going to buy the rest of Topgolf. Instead of cashing out, we're going to buy the entire chain. And holy cow, did that not work out? Just a. I mean,
look, they had great business, not a great business, right? Like Fortune Brands business with Titleist. In golf, there's two good businesses: shoes and balls. Balls is the absolute best business because you know what everyone does? They hit the damn balls in the water and they need to buy more balls. Right, so that's the top business in golf. Shoes are the second because you keep needing shoes, and the clubs is probably third. Operating a golf course, unless you have one of those magical golf courses, is the worst. Okay, and so you take that to what these guys are doing, and it's like, why would you get into the heavy OpEx business? Those top golfs are like 40 to 60 million per unit of CapEx. It's just a lot of beers and driving range rounds and nachos that you got to sell in order to get any kind of return, and you take on all the recession risk. It's not a great business. Like, let's just be clear. It's not. No. It's fun. I like going to Topgolf. So let's finish this, and I'm glad we did this, Jeff. I'm glad we brought the Callaway up. This is a nice way to end it. Kevin, what do you think of that Topgolf chart? Or that whatever.
I think it's Gap 2, the sequel. I think the turnaround's in place and it's going to rally 13% on the next earnings report. I'm completely lying right now. This is the only chart that I can recall that's testing COVID lows. You got to work hard
for lower. Yeah.
You got to work hard to do that.
Last time it was here, literally every single Topgolf and every golf course was closed. So they had a lot more exogenous risk at the time, which doesn't think operationally things have not been exceptional for them. But if they break it up, just rip off the Band-Aid, man. They should have a little lightning experience, a little oops, hey, wow, 75 of our Topgolf locations burned down last night. We better investigate that and collect the insurance money and just go out of business quietly, and they'd be fine.
It's expensive real estate around here. It's next to all the the intersection of major highways. I mean, it is big money.
Yeah, and just a bad neighborhood right there in what used to be the parking lot of a Walmart every single time. Let's get people hammered, and we'll give them clubs and just have them smash balls as far as they can. Most of them don't know how to golf at all. The drinks are like $18 a piece. I mean, they really haven't kind of penciled out some of the demographics there. So it's a problem. They also have a British outerwear company, just because God knows who talked them into how to diversify. That hit them 2 quarters ago. They tried to blame the miss on oh yeah, the Top Golf comps were down 11%, but it was really this British outerwear company that we're involved with. And it's like, just make the golf clubs. Just make the Big Berthas, you idiots. Golf clubs are a bad business, but the best part of it is making just golf clubs that everyone can hit. And Callaway created that industry with the Big Bertha drivers, which looked like a Volkswagen on a stick when they came out. They're like 3 times the size of the original drivers. And that's what their niche is, which is the best place to be. And so you're going to grow that business 2% a year if you're really good. You're going to collect a decent amount of cash on it. And your goal in life should be to not turn your cash flows into something that if there's a fluctuation in rates, all of a sudden you're screwed, because you know what you're going to make. It's not very much, but man, just go private. Just be private. Be a private company. It'd be amazing.
Yeah. Just like our friends at Dave & Buster's, right, Jeff? Like those guys, they should not be public. Like they make cash. They try to do these things to drive comps and growth. They're opening too many stores. It's just like, hey, look, you got a concept that's okay. People go there, you make money. Like, you're just not set up for public. Some companies are just not meant to be public companies in essence, and like you said, Callaway's an iconic brand. You had a nice business. Go play golf and stop buying bullshit. You know what I mean? Like, it's just, there's so many cases of this, of management just making bad decisions with decent businesses and turning, good stocks and good businesses into not that, I guess you'd say.
And of these recreational sports, like golf won. We compare golf to bowling. Bowling is an industry you don't want to be in right now. Bowling is just a shrinking business that peaked in 1960. Golf could have, by all rights, been kind of dismissed entirely by now. So my point being that Callaway should be sitting in the catbird seat. People are golfing no matter what. It's entirely resilient. It's proven it's just always going to have its audience, but that audience is going to grow at about 2 or 3% a year. I mean, the fact that the number of golfers is growing and the sport itself has never been held in higher contempt by the public in terms of the professional level of it is telling. People don't give a shit how things are happening at the tournaments. They just like to go smash golf balls.
Yeah, and they lost Tiger. It's hard when you lose Tiger. That was a big...
Tiger's fine, man. Shut up. He's just a little sore. He's going to be fine. He's got one more major.
You know what? It was great to see him win that last one at the Masters, though. Wasn't that just a glorious, one last bask in the sun, and remind you how great he was back in the day? Oh, I love Tiger. He was the best. All right, that's enough. We've had some fun here today, boys. Covered a lot of ground. We basically told you, hey, you know what? Look where other guys aren't looking. Or if you have Jeff Mackey's number, call him, because he might give you a couple good ones. And
I can put some hockey money to work for you.
All right. Well, that's it for us. Enjoy your weekend. Keep your head on straight, and we will see you next week.